On Bloomberg.
A somewhat tepid week for U.S. equities, an interesting week in the bond market, and a phenomenal week in certain corners of the commodity space. Abigail Doolittle standing by right now with our commodities close. Abigail.
Well, today, Ramin, we're mainly looking at declines. Oil is one exception, but off of its highs, up about 0.4%. And the IEA, of course, saying that global oil demand has hit a record and may press prices higher. So we do have that still technically stopped out at 85, but it seems as though there's fundamental reasons to think maybe that barrier will be breached. Copper down 1.3%, wheat and corn down. I'm sure it's related to weather. We also have a report out saying that Russia is tightening their grip on the global wheat supply with even bigger exports. So if there is more supply coming from Russia, that would press prices down. We also have the Bloomberg Dollar Index, at least on the week, at play. If we take a look at what's going on here, over the last 2 weeks, the Bloomberg Commodity Index, after a multi-week winning streak, now down 2 weeks in a row, down 1.5% over that time period. We're always talking about how when the dollar rises, that's going to press the risk assets down. Well, here's this dollar, and it's interesting, Romain. I'm not sure I've ever seen this. Basically, an equal inverse relationship between the commodity index and the Bloomberg Dollar Index.
Yeah, how's that for correlation? Abigail Doolittle there. A nice wrap up there of what's going on in the commodity space. Let's stay there right now and take a look at oil. The International Energy Agency out today saying that global oil demand set a record, and consumption from China and beyond threatens to push prices even higher. Julia Fanzera is joining us right now to talk a little bit more about this. I was looking at crude oil, 7 straight weeks of gains, which kind of snuck up on us. I have to admit, I was kind of shocked when I saw that. Is this really a demand story right now? Because it seemed like the narrative before was all about supply.
I think it's still really about supply, and just because today and this week we have gotten 3 reports on demand saying that demand is actually surprisingly resilient. The OPEC report said, we'll expect demand to also increase in the second half of the year, and that's going to tighten supplies. But I really think that what's really been boosting this higher is the Saudi Arabia supply cuts and the fact that Russia is also cutting down its supplies. And recently also there was an escalation between Russia and Ukraine, and the possibility that Russian supplies in the Black Sea are going to go off the market, that is also pressuring traders and prices to go higher.
So there's a lot of different factors here, and you've definitely seen quite a climb in energy. Of course, oil for that 7th weekly gain, as we were just talking about. Is anyone saying, though, that we're meaningfully breaking out of the range here, or are we just going to test the upper limits?
We already definitely broke out of the range. Oil has already passed its 200-day moving average, and really what pushed it forward was Saudi Arabia extending its cuts. So we are on the trajectory higher. Yes, we may take a breather because obviously we've been rallying for quite a bit now, but everyone is now expecting oil to continuously go higher from here.
Well, yeah, of course, that assumes that, somebody doesn't muck it up here. Not everybody's happy with this already, and we know that, this becomes a political football, at least here in the U.S. Is there any sense here that there's anything that would interrupt any sort of steady increase, this steady increase that we've been seeing?
Absolutely. I think one of the biggest headwinds right now would be the fact if the U.S. did not have a soft landing recession, because interest rates have really pushed oil prices down in the first half of the year, and because there is a slightly more positive outlook from banks, including Goldman, JP Morgan, they expect that softer landing. But if that doesn't happen, then oil prices could be pushed down once again.
Because people could get upset. Have you seen gas? I don't know if you own a car, but gas prices. Katie owns has like a big, one of those gigantic Suburbans or something, and it's hard to fill that up.
Yeah. And right now, that is one of the only things that's pushing inflation higher. So it is going to be very difficult.
Yeah, Katie, you got to trade that in for something smaller.
I'm not. It's bad for the environment, but boy, do I love it. Julia Fanzaris, really appreciate your time. Thanks for joining us. Still ahead on this program, we're going to keep talking about cars because automakers Ford and General Motors hoping to resolve labor issues as negotiations with union workers intensify. We'll talk to Morningstar analyst David Whiston, for reaction on the street. That's next. This is Bloomberg.
first international media interview since becoming Taiwan's vice president, Lai Ching-te speaks to Bloomberg exclusively about his presidential run and managing relations with the U.S. and China.
Taiwan security is a global issue, and the peace in the Indo-Pacific region benefit all the country.
What kind of leader would he be? What are his plans for Taiwan? And what would they mean for the world? Tune in all day August 15th, only on Bloomberg, your global business authority.
Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power.
This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
He
story.
is there, the kind of upside.
All right, let's get a view from the sell side with our top calls, the movers on the back of analyst recommendations. And we start off with Twilio. The internet infrastructure company raised a buy over at Argus as an artificial intelligence may prove to be a key accelerant for the business. The analyst also cites a recovery in digital ad spend as Twilio's clients pay more for its tools to boost customer engagement. Those shares up 1% on the day. Next up, let's take a look at Kano Health. Downgraded to neutral from buy over at Citi. The price target going all the way down to 80 cents. The healthcare provider, which went public, remember, through a Barry Sternlicht SPAC deal less than 3 years ago, sounded the alarm bells this week about its ability to maintain operations and said it's exploring a sale. Those shares down 70%. And finally, let's take a look at Lucid. The electric car maker cut to underperform over at Exane because of disappointing production and delivery performance. The analyst also warning that investors may face dilution on the horizon. Shares down about 3% on the day, and those are our top calls. Let's stay in the world of automotives here and talk a little bit about Ford and General Motors down each for a fourth straight day here as the market grows more and more concerned about the negotiations with one of its primary unions. Some of the demands coming out of those union leaders, well, even if there is a deal struck, could have a material impact on those companies' bottom lines. David Whiston joining us right now. He's U.S. Autos equity analyst over at Morningstar Research. And David, are some of these fears right now, is there a sort of, I guess, some substance behind it?
I guess maybe the substance from an investor perspective just comes from all the uncertainty that's around these talks, and there's always uncertainty with these talks that happen every 4 years. But this year is a totally different ball game for a number of reasons. One of which is that the demands have been made public by the union in advance, which is unusual, but also that the demands are in some cases incredibly drastic and I see their perspective, but in some cases, I think they're unreasonable. In some aspects, they're not unreasonable either.
Well, I am curious. I mean, just on those demands, a lot of people made a lot about the 40% number that was tossed around based on various reporting here. And we know this is an opening salvo. I think what was interesting, I went back and looked at the past negotiations, and when you look at some of the starting points, this is way higher than where they even started in the prior negotiations in terms of percent increase in pay. And I'm curious as to why you think the union this time around felt comfortable enough, felt confident enough to make such a strong demand up front.
Yeah, for a number of negotiations, the unions have been dealing with the fallout of the Great Recession and the bankruptcies of two of the Detroit Three. I believe it was even in 2011, they weren't even allowed to strike at FCA and GM because of the bailout money from taxpayers. So they've sacrificed a lot multiple times. When you adjust for inflation, put the wages in real dollars, as UAW President Fain did in a video recently. The starting wage is drastically lower than where it should be. And you look at the profits being generated by the firms now, they're doing quite well. And I think the workers do deserve a raise. You mentioned the 40%. Honestly, I think the automakers can afford to do that. It's the other stuff like reopening the pensions, resuming retiree health care. It's just, unfortunately, it just doesn't look economically feasible.
And David, of course, there's a lot up in the air right now, as you just walked through. But assuming that the workers win here, what does this mean for the likes of GM and Ford when you consider their non-union rivals, such as Tesla, for example? What does this mean potentially for the competitive landscape?
Yeah, and that's a really key point here is what does the contract ultimately look like? Because according to your excellent auto reporters in Detroit, they came out with a number citing some sources of $80 billion in incremental costs at each of the Detroit Three. That number is just, to me, off the table. They cannot afford to do that because compared to 20, 30, 40, 70 years ago, you have so much more competition now. And some that hasn't even come stateside yet. All I hear about constantly is how good the Chinese automakers are getting. But Tesla is the cost advantage leader, and you have to do everything you can to keep your costs. I don't think you can get to parity anytime soon, but you certainly need to be competitive in that cost arena. And so adding $80 billion in costs, it just doesn't make any sense.
And David, we don't have much time left, but I agree our reporters are excellent. And I agree $80 billion is a scary number. But then you take a look at the stock market reaction, the big fall that we're seeing in GM, in Ford. Do you think that this is an overreaction, or is this well calibrated to this potential risk?
I think Wall Street hates uncertainty and they don't like fear, obviously. So I think the stocks are going to stay in the penalty box, so to speak, the investor penalty box for a few months at least until we see how this plays out. Do we have a strike? Is it a strike at all three or just one? And how long does that strike last? Because this is not a normal negotiation, which we could talk about quite longer.
All right. Well, we're going to have to get you back on to talk a lot about this. Already seeing the pain in the shares, down a fourth straight day on both GM and Ford, and down a fourth straight week as well. We're going to stay on the topic of the summer of strikes, the labor strife out in Hollywood. That discussion coming up next as the writers and studios head back to the negotiating table. We do know that there is an offer out there. Whether the writers will take it remains to be seen. Stick with us. This is Bloomberg.
Chinese technology companies, let's say Alibaba, Baidu, Tencent, they have gigantic market values and they're very prominent in China, not as prominent outside of China as obviously in China, and certainly not that prominent in the United States. TikTok, by contrast, is not in China, but it's gigantic outside of China. of the United States and everywhere. What did TikTok do that enabled a Chinese-based company, parent company at least, to do so well outside of China?
We think it's challenging to build a global company in general, but the best ones we have seen so far are ones that take very consistent global learnings and adapt them to the local countries that they are operating in. So you need to be global and local at the same time.
Season is here.
Decent start to earnings season.
We are heading into the meat of earnings season.
Bloomberg breaks the numbers first.
We have Bank America, we have Charles Schwab.
Tesla, Netflix, you name it. They're heading in the right direction.
A record quarter of revenue.
With exclusive expert analysis.
What do they have to deliver to justify the rally we have seen?
Earnings are still going to be under pressure.
Is there a divergence that's really important to draw here?
The massive divide between Diamond and Fraser.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Well, after more than 100 days of striking, the Writers Guild of America is again meeting with negotiators representing major Hollywood studios. Let's get into it with Chris Palmieri. He leads our media and entertainment coverage at Bloomberg and has the latest from LA. And Chris, in the last 3 months, is there any reason to think that either side has moved closer together?
We're starting to hear that, yes, the studios are reaching out more. They've been having almost daily meetings, the senior executives at these companies, not the CEO level, but the people who head the film studio and TV studio, have been meeting regularly. There was outreach last week, if you recall, and they met to discuss the talks moving forward. It didn't go well, but there was outreach again this week by the studios to the Writers Guild, and they agreed to meet today. So what we're hearing is the studios are presenting some sort of settlement plan, but the two sides have been so far apart, it's hard to imagine we get anything as soon as today.
Well, give us a sense here. I mean, we were talking about that it's been roughly 100 days since the writers' strike started. I think that milestone was reached a couple of days ago. Is this something encouraging about the idea that at least somebody is willing to put something on the table?
Absolutely. The studios have really kind of looked bad throughout this. We've reported that this earnings season, they've reported all the profits that they've been making by not making movies and TV shows. The writers and the actors are the folks out on the picket lines. They're posting social media images of how little money they make even on hit shows. And so they've really won the public relations effort here. And so I think that's part of what's going on the studio's part, that they want to bring an end to this.
So the writers and the studios are meeting. Of course, the actors are on strike as well. What is the state of those negotiations?
Nowhere. The thinking was originally when the writers walked off in May that the studios would get a deal with the directors and then with the actors. That did happen with the directors, but it hasn't happened with the actors. Those talks broke off last month, and there haven't been negotiations again, so now we're back to the writers.
So give us a sense here of what happens. I remember the last time we had the strike, there was the idea that once one union sort of decided that I guess they were kind of on board with some of the changes that were offered here, the other unions sort of got on board with it. Is there some sort of coordination or at least some sort of recognition that if progress is made with one of these unions that the others might potentially follow?
That was the thinking and I think the hope of the studios, but the directors reached a deal very quickly. The issues that the actors and the writers are striking about seem to be more core to their being. For example, artificial intelligence. Hard to envision a scenario where technology would replace a movie director, but it certainly could replace a writer or an actor in some scenarios. So that's become a big issue that they haven't agreed on.
All right, Chris Palmieri, keeping an eye on the writer's strike and the actor's strike out there in Hollywood. We do want to continue our coverage here of the summer of strikes because there's a reason why we've been talking about it so much. The number of strikes, and more importantly, the number of people on strike has grown dramatically just over the last few years. And anyone who's part of a union knows the work of our next guest. If they don't know her, they certainly know the data and really the efforts that she's done to create better understanding, not only of how labor unions organize, but some of those anti-union tactics as well. Kate Brofenbrenner joining us. She's the Director of Labor Education Research and a Senior Lecturer at Cornell University, and she's also co-director of the Worker Empowerment Research Project. And Kate, you also have this great labor action tracker, which I was going through, and you kind of forget. I mean, we talk so much about the UAW and, of course, Teamsters with UPS and obviously what's going on in Hollywood, but you kind of forget you've got hotel workers out in California on strike. You've got iron workers on strike up in Minnesota, dairy workers up there in Minnesota, in Wisconsin, and quite a few other places here. I am curious as to what you think has sort of led to the confidence, if you will, for people to really push back against, let's be honest about it, for the last few years, people just took whatever employers gave them.
I think workers have been taking for a long time, and they went through the recession and they made concessions to help their companies in the country move forward, and then they went through COVID and they not only took concessions, but they risked their lives. And they felt like that employers, in each of these situations, employers kept raking in huge profits while they were sacrificing, and there was no effort to give them back. And when it came to COVID, the sense was that employers were putting their lives at risk, not even willing to pay for PPE, making them come to work sick, not letting them stay home with their children, and really making it so that they were coming to work to die, not just, which is workers are willing to take a lot, but that pushed them over the edge. There's particularly a great deal of anger among young people who feel like, they're saddled with debt. They are worse off than their parents, and they're worried about whether the world is going to be there for them given the climate crisis. And so they're very angry and frustrated and are leading this effort. I think this is anger bubbling over, frustration bubbling over, and the greed of the corporations has just accelerated it.
It's one thing to be angry. It's one thing to walk off the job into the picket line. How successful, though, do you think some of these movements can be? We were talking about how the UPS was able to avert a strike primarily because they had to give in. There was a critical mass, a critical potential there for them to lose a lot of money. But let's face it, not every industry, not every company, not every set of workers is going to have that same leverage that the Teamsters drivers had, or that the Teamsters had over at UPS.
But I think we have to, there've been many long, drawn-out strikes where the workers have gone back in without a victory, such as the Warrior Coal strike. But there have also been many smaller strikes where the unions have won and the workers have won significant gains, and partly because workers are bargaining and organizing for broader social issues. The teachers going on strike all across the country because they're concerned about the quality of education that students are getting, or the fact that students don't have enough food or adequate housing. Healthcare workers going on strike because they're concerned about the quality of healthcare, and so they have public support, and that public support is very powerful. In many cases, they have political support. They have support from this administration that they never had that kind of support before. They also use their power more broadly, talking to investors and suppliers and customers, and making it so the cost of not settling with the union is greater than the cost of settling.
And Kate, you touched on this a little bit, but what role do demographics play here? What role does millennials and particularly Gen Z factor into this really broad-based striking that we're seeing across the summer, across industries?
Young workers in this country are extremely interested and supportive of unions. It's reaching close to 80% in terms of public opinion polls about how young workers feel about organizing, and we see them leading organizing efforts, taking stands, but they're pushing the labor movement in a different direction, and that they're pushing the labor take on broader social issues and really push employers to take on issues that aren't legally within the mandatory subjects of bargaining under the National Labor Relations Act. And also, people of color are also playing a very leading role. We see younger workers, and we see younger Hispanic and Black workers organizing. We see, organizing efforts in the South where we had a major manufacturing win, the steel workers at Bluebird Bus Company. We have the flight attendants organizing, and we have workers organizing in every sector, but many of them are young, many of them are women, many of them are people of color.
And situate this conversation in the broader economic environment right now, because the labor market is extremely hot, the unemployment rate is extremely low. If that comes up, do some of these workers lose their leverage?
Certainly it helps workers that there's a tight labor market. There's no question they feel more confident going on strike. But, if you look at the writers who are on strike, there are so many writers who are just scrambling to make a living, and they're still going to be scrambling to make a living whether the overall labor market is tight or not. And they're out there in strike living off nothing because they feel like their art is going to disappear. Their craft is going to disappear. They can be replaced by AI, that, streaming, they don't get residuals from streaming. And so they are the creators who are having their art robbed from them. And that's such a powerful issue that they would continue striking even if there are greater risks for the strike.
Kate, really great to catch up with you. Some great research coming out of you and your folks over there at Cornell. That's Dr. Kate Brofenbrenner. She's the Director of Labor Education Research and a Senior Lecturer at Cornell University. And we're going to continue on this topic all day long here on Bloomberg Markets to Close. A conversation with the Chief Negotiator at SAG-AFTRA. Of course, that's the main actors union in Hollywood. Duncan Crabtree, Ireland, will be joining us in the 4 p.m. hour right here on this program. As we round into the 3 p.m. hour here, the final hour of trading, Katie Greifeld here on this Friday afternoon. You see, the Philadelphia Semiconductor Index, the big laggard here on the day.
And it's a tired market. Let's just point that out. You take a look at trading volume right now, and the S&P 500 in particular, 20% below its 20-day average. It is a Friday in the summer, in August, and you can see that in the trade today.
We should point out, as you're putting out some of those numbers here, we talk about some of the technical measures that have been breached this week, including the NASDAQ 100 and that 50-day moving average. Downtrends that you're starting to see on some of the
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And very good afternoon, everybody. It is Friday, and we're so glad it is. I'm Carol Masser, along with our Bloomberg News Deputy Team Leader for U.S. Equities, Jess Metton. Tim is actually off today, and, you know, a lot going on, although I'm kind of just a little lost because I was listening about the aliens from Sound
How
On.
could you not? It was so entertaining.
It's so funny. When I was at the beach, my family brought up, because they know I'm in the news world, and they're like, what do you think about these aliens? I'm like, I'm a little worried about climate change right now and some other things. So,
It's something that really grabs your attention.
It does. You know, you bring up alien and, like, you know, we're all like, what? Anyway, it is Friday, August 11th. We're getting ready to wrap up the trading day and the trading week. I will say it's been another interesting day, and I do feel like we have been saying this every day, where we kind of get one maybe trend, if you will, at the open coming off an economic report or something else, and then we kind of dial back. It's safe to say, if there's a trend, a theme, I feel like it's a reminder that, yep, inflation is way down from a year ago, but the Fed's probably still on an inflation fight.
And I have to say, one of the particular sectors I've been keeping a close eye on is energy, just continuing to outperform after being one of the amongst the losers this year. And especially when you're looking at some of these ETF outflows hitting extremes, some people wondering, potentially, is that at a contrarian level just yet? So keeping an eye on that, Carol.
All right, so we're going to talk about energy probably with our TV guys, too, as well as we break down the trade. But I do want to get into, because of the Treasury trade in particular, because we are seeing, as stocks kind of bounce around, but definitely off their highs of the session, we do have yields higher. We're going to talk about the inflation fight, still on, as we saw in this morning's PPI report. We're also going to get into the ticking time bomb, not really the way to endear yourself, if you will, to a country or to someone, if you will, but President Biden kind of saying that. The U.S. and China political and economic relationship definitely on our radar. And then we're going to talk retail earnings.
Walmart, Target next week, Home Depot. So that's key focus heading into next week. And then also we're going to be speaking with the founder and CEO of the blockchain company Paxos, which is behind PayPal's new stablecoin. He'll stop by later.
That was a big story this week, but I got a lot of questions for him because I still have problems just with calling things a stablecoin because they ain't so stable.
Right, that's a great point, Carol.
All right, so we're going to talk about that. We're going to get into the lazy girl jobs. That's a new career trend, if you will. And we're also going to talk with Yannick Benjamin, back with us, co-founder of Wine on Wheels and Contento Restaurant. Always so inspirational, but also I just love all the worlds that he's playing in. And we're going to drink a little bit of wine. So it's Friday, excited. Everybody. All right, right now, let's head over to our TV team. Countdown to the close. It starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostick alongside Katie Greifeld, joined right now by our colleagues Carol Masser and Jess Metton, filling in today for Tim Stenevec. Welcome to our audiences across all of our Bloomberg platforms. Carol Masser, we're closing out the Friday afternoon here. A somewhat down note. Interesting, the one bright spot, at least as far as the major indices, is actually the Dow Jones Industrial Average.
What's up with that? Does anybody care about the Dow anymore?
Yes, I just said it.
Oh, because Romaine says it? Yeah. Wow, we are living in Romaine's world. No, I think it's interesting that we have been talking about the Dow.
Wait, can someone cut that clip? And just, we're just going to play it every time.
No, it's in the ether. It's gone. What's interesting, we've talked a lot about the Dow, I feel like, this past month or so. So what does that say about rotation or emphasis by investors? Having said that, once again, we were focusing on another inflation print, and this time it was the producer side of the inflation story. We got that this morning, picking up, boost from services, and so...
So what's the verdict?
Well, I don't know. I think what's interesting, Neil Dada, I know we've all been talking about Neil, but others have said too, freight rates are bottoming. We've seen oil prices pick up. So is it just a reminder that the Fed ultimately, guys, has to be vigilant?
And I was speaking with Jillian Wolfe over at Bloomberg Intelligence, who crunches the numbers when we always talk about margins, right, and what this means for corporate America. So the spread between producer prices and consumer prices, it came down a little bit, but overall, if you look over the past year, still very much in positive territory. So that should give you some indication there. When we're looking at earnings, there's potentially still are brighter times ahead then.
Yeah, I feel like the takeaway from the PPI combined with the CPI from the day before is that kind of like we don't know anything. Because I feel like the CPI was definitely encouraging, but I don't know. I mean, for all those folks who are positive about this PPI report, I don't know, there was a lot in there on the services side where you're just like, this isn't disinflation.
No, exactly. Yeah, I agree with, sorry.
No,
I
was just going to say, you add it all together, I think the bond market is pretty set on their pricing, that even if the Fed, maybe they hike again, maybe they don't, but they're going to be on hold for a while.
What did Bill Gross say about it?
Everything.
Oh, okay.
Yeah, no, you'll have to go
Did you
back.
not listen?
I listened to a little bit, but I was busy working on my broadcast.
I get it. I get it. I'm going to do a hard pivot here.
Likely story.
Just for Carol. Do you want to talk about Halloween?
I love Halloween.
Halloween.
So fun. So does Walt
Why
Disney
not?
World.
What else do you talk about in mid-August?
There is a fantastic story in the Wall Street Journal saying that Walt Disney World is rolling out jack-o'-lanterns on Main Street, USA. There's a fantastic quote in the story that August is the new September. That is from an associate professor at Farmingdale State College. And get this, I have
Who
a
makes
size
these
and scope.
proclamations?
I have a size and scope. All 6 dates in August for Mickey's not-so-scary Halloween party have sold out already.
Okay, so first of all, August is the new September, but
Yes.
but Halloween's in October. So I'm still confused by this. And is this so? Am I supposed to? Is this like a read on like how troubled the Disney parks are that they got to like do Halloween early? When's Christmas coming? Is that going to be like what, September 2nd?
Yeah, exactly. Right after they get through, basically on November 1st or maybe.
I will
earlier.
say that Halloween is actually my favorite holiday.
Oh yeah.
When do you dress up? Are you going to be Ken this year? Because Barbie costumes.
There's going to be so many
number
Barbie
one for
costumes. I was thinking about that, and I was like, everybody's going to be in Barbie something this year, right?
You could be Alan.
That's no. No one wants.
Nobody
to be
wants to be
Alan.
Alan. You know what's interesting? Michael's launched in July 21st, I think it was. Started like the 100 days to Halloween, and they started putting Halloween stuff out there.
But that makes sense. 'Cause, I mean, how else do they make money, right? It's like, you know, Halloween and a couple other, and then, you know, those 5 people who are still crafting.
Eddie Munson, perhaps, Romaine?
You don't craft,
Maverick from the Maverick.
I need something cool. Well, Maverick, yeah. How about that?
Ariel costume, Disney connection there.
Maybe. I'm going to be Carol Master for Halloween.
Is she being serious with me? Or what's happening here? Ariel.
We are living.
Is that like a mermaid? How do you even dress up?
We
as a
are living in
mermaid?
Katie's world.
Oh.
Love it. Let's end it there.
Does Jess have anything to say? Does she let you talk, Jess?
I feel like we all should. Carol Mass would be the best Halloween costume, Katie. I agree.
Yeah.
What is a Carol Master costume?
I got to get some highlights.
Now I'm scared. Now I'm scared.
On that note, yeah, we'll be back in about 50 minutes with the answer to that question.
All right, guys, join us at 4 p.m. We're going to wrap up the trading day and the trading week, our cross-platform radio, TV, YouTube, and, of course, Bloomberg Originals. We call it Beyond the Bell. We'll see you at 4 p.m. Costume that will provide some economic momentum, no doubt about it. But another day, another inflation print. We just talked about it. Jess and I did. U.S. producer prices picking up in July, primarily due to increases in certain service categories, highlighting the choppy nature of getting inflation back down to target. But you heard Romaine say, you know, we were all kind of happy or felt encouraged by the CPI print yesterday. PPI felt a little bit different today,
Right,
Jess.
and especially because I know Anna Wong will get into this, but she was thinking the month-over-month number was going to be actually a tick higher than it actually did, and we're not seeing necessarily the energy numbers flow through just yet.
All right, so let's get into it and see what our Bloomberg News senior editor, Chris Ansey, has to say. He's on Zoom in Boston, and Bloomberg Economics chief U.S. economist, as Jess just mentioned, Anna Wong. She's on the phone in D.C. Anna, let me kick it off with you. Your take, your analysis following that release.
Yeah, I think overall it's still consistent with our view that the near-term inflationary impulse is that of going down. So the PPI is important because parts of it feeds into the inflation metric that the Fed cares about, which is core PCE. And what's driving the uptick today was actually financial portfolio management, which is a very jumpy and volatile category.
What is that category? It sounds so wonky.
Right, it's reflective of what's going on in the bond market and stocks market. And for example, if there's a stock rally, it could drive up that number. So I think that actually is not, even though that counts into the super core measure that Powell cares about, They know that this is a volatile category. So if we focus on the sticky part, actually they're all going down. And particularly today's University of Michigan short-term and long-term inflation expectations numbers are what the Fed cares about. They are also going down. And so I think the signals that the Fed cares about are basically unambiguously pointing that inflation is going down.
I want to bring Chris into this conversation. Some other data that we did get this morning, if you're looking at the University of Michigan, those inflation expectations also unexpectedly falling. So what's the worry here, do you think, Chris?
Well, I think, you can see the worry, especially in the market reaction yesterday to CPI compared with the market reaction to the previous month's CPI. So as we have flagged, the 0.2% increase month on month for July was the same as June. Back in June, when we got that figure, investors were cheering, right? Stocks rallied on the day, treasuries rallied on the day. Yesterday, we got a little bit of a rally in stocks, but then we closed, pretty much flat. Today, the market's not really doing much. Treasury yields are higher. So I think actually the idea that inflation is going to stick around at an uncomfortably high level is starting to percolate. And in fact, I think Anna is among those who has been saying that all is not necessarily rosy looking ahead into the fall, and that there are a number of inflation dynamics that continue to be a concern. I think that investors are coming to grips with this. And so, you look at a number like UMich inflation expectations, and folks are saying, well, that's nice, but I think they're looking to, and I'm sure Anna can talk in more detail about this, at some of the, unpleasant dynamics that are still in train.
Well, then Anna, come on in on this, because I am thinking about too what Neil Dutta put out and shared with us all this morning right after the PPI print, and said, while freight rates are bottoming, oil prices are climbing. If you look at companies paying up big for workers in some cyclical industries, UPS, GM, Ford, in an above-trend economy and tight labor markets, he writes, and I'm reading from this note, risks building that the Fed has more work to do, so that higher for longer. You agree, disagree? What, Anna?
I disagree. Well, so I think the inflation picture is complicated, and that Chris is right that there's some worrisome dynamics in the fall, and which is that oil price is rising, and we have extreme weather pattern, which could introduce new adverse supply risk, which could reverse the progress on some of the supply chain bottlenecks. But at the same time, I think where we differ from Neil Dutta and many other people on Wall Street is that we do think that the U.S. economy actually is not reaccelerating. In fact, a lot of cracks are showing. Some recessionary dynamics are showing its ugly head, which is, number one, surging bankruptcies among small firms, and rising credit delinquencies, even before student loan payments are resuming. So come September, after September, we're going to see, we expect to see a surge in delinquencies, and then lenders will further tighten their lending standards. And that's how you get that recessionary downward spiral. And so we also think that the labor market is overstating the strength. A lot of the non-farm strength, payroll strength that we have seen are going to be revised down. In fact, it's even possible that 2 years from now we see that monthly non-farm payroll was actually negative last month. So that's where we are. We think core inflation, there's a very strong disinflationary impulse in the rest of the year, but the risk is that headline inflation will be going up, but because inflation expectations are going down, the Fed will look through these adverse oil shock.
And Chris, I have to get your thoughts because JP Morgan and Bank of America have both dropped their recession calls for this year, but you still have Wells Fargo that's hesitant to do so. What is giving some of these Wall Street firms pause still to keep those recession calls at this point?
Well, I think Anna was just pointing to some of the dynamics. One thing that is kind of hard to gauge, and the bankruptcy numbers that Anna points to are a symptom of it, but is the magnitude of pain from the resetting of borrowing costs higher. So, any company that took out a loan a few years ago, sold a bond a few years ago, that needs to refinance that when it comes due, today, later today, next week, in coming months, next year, that's going to be at a much higher cost. One other symptom that we see of this dynamic is the rapidly surging debt interest payments that the U.S. Treasury is paying. And we get nice, figures on that on a monthly basis, even in fact on a daily basis. And we're seeing that that cost is soaring by hundreds and hundreds of billions of dollars for the U.S. government. Well, this is also happening at the corporate level. Right. We don't have such great data on that, but we know the dynamic is going to impart a lot of pain. And the higher that that interest rates go, the longer that they stay at these elevated levels, we're going to see an increasing economic impact. And I think that's a dynamic that leaves many on Wall Street, including the ones you mentioned, still seeing a recession.
It's interesting. As everybody's backed off their recession call and as more strategists are upping their targets, I do feel like our guests who come on and talk about the market all want to kind of take some money off the table and want to be a little bit more cautious. Chris, this question, I want to pose it to both of you. You first. I mean, when it comes to, as an editor, the things that you really and you and your team are watching very closely in terms of an indicator of the U.S. economy or maybe even the global economy, because everything we know, despite the pushback on globalization, we're all connected.
At the end of the day, I just have to keep going back to jobs. And Anna says that they're going to turn at some point. At the end of the day, one of the key ingredients, right, in the official National Bureau of Economic Research Business Cycle Dating Committee, determination for heading into a recession is payrolls. They have to come down. And so if we don't get negative numbers, right, and if we don't see a softening in the job market, I don't know how you get a recession.
Hey, Anna, save 30 seconds for you. Your number one thing top of mind that you keep an eye on, just quickly.
It would be senior loan officer reporting of whether they're tightening credit conditions. Non-farm payrolls could be negative right now because actually those things are measured very inaccurately in the eve of a recession. So I'm not putting too much weight on that right now.
All right. Well, great discussion as we head into the weekend. Guys, thank you so much. Chris Anstey, he is, of course, Bloomberg News senior editor on Zoom in Boston, and Bloomberg Economics chief U.S. economist Anna Wong. She is always a must-read by everyone here at Bloomberg. We really appreciate both of them. She joining us on the phone in D.C. Carol Masser, along with Jess Manton. She is in for Tim Stenevec on this Friday. More to come right here on Bloomberg Business Week on radio, on YouTube, and, of course, Bloomberg Originals. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 3:21 on Wall Street. We do check the markets for you all day long here at Bloomberg. And we have breaking news on Sam Bankman-Fried. His bail has been revoked, or is being revoked by a U.S. judge. That taking place in a court hearing today, not going in favor of the co-founder of FTX. Again, Sam Bankman-Fried's bail is being revoked by a judge, and that means he will presumably return to jail if those stand. Stocks, meantime, they're mixed this TGIF Friday trading session. We check the markets for you all day long at Bloomberg. Inflation headlines may be rattling investors a bit. We had mixed reports on inflation, one showing inflation easing, another showing inflation strengthening a little bit. The Dow, it's strengthening. It's up 0.3%, 106 points. The S&P 500 pretty much flat, down 3 points. The NASDAQ down about 0.6%. The yield on the 10-year, every report I have done today, it is higher. It is now 4.16, actually 4.1679 if you want to look all the way across. So again, that yield on the 10-year going higher. Spot gold right now, it's pretty much flat at $1,912 an ounce, and crude oil, NYMEX crude, it is up about 0.4% right now. China's house of cards looking a little rickety. Real estate company Country Garden reporting it expects to post a huge net loss, $7.6 billion for the first half, raising concern it'll be the next giant to default in China. Rebecca Chong-Wilkins says things are looking pretty ominous right now.
The stock, a Hong Kong penny stock, the bonds around 7 cents on the dollar, high levels of distress here. And in part, that's because the coupon, that payment that needs to be made is only about 22 million. It's not an enormous amount of money, but I suppose there is this anxiety that the chair people of property developers so far haven't been inclined to back and kind of go into their own back pocket to pay.
And that was Rebecca Chong-Wilkins there. We could see more developments on China Garden Holdings in China. After that loss, we'll see if it's the next real estate giant to default. And that, guys, is your Bloomberg Business Flash.
All right, Denise, thank you so much. Denise Pellegrini there with a Bloomberg Business News Flash in for Charlie Pellet on this Friday. So, as you know, Jess, there was a lot of news coming out of China this week.
It is, and especially when you're looking at their latest data. I mean, this was supposed to be the year where we saw big improvement in China's economy, but we're not seeing that yet when you're looking particularly in their data and what that means for the global economy. It is the world's second largest economy, Carol.
It's gigantic, enormous, so important. And there was a lot of news about the property market, Alibaba earnings, and then there was, of course, news from the U.S. about China. Today, a most read on the Bloomberg terminal, President Biden calling China's economy, quote, a ticking time bomb. So this is kind of a little mind-blowing, since we all thought the U.S. was renewing its engagement in a positive way, fingers crossed, with China. So let's get to it with more on the Chinese economy and that difficult relationship, complex relationship between the two economic superpowers that are, for better or worse, inextricably linked. We're talking about the U.S. and China, of course. With us, Bloomberg News White House correspondent on the phone from Washington, D.C., and Bloomberg Economics chief economist Tom Orlik on Zoom in our D.C. bureau. Let me first get to President Biden, since that is top of mind, among our most read. Break it down for us right now, Jordan Fabian. What did President Biden say, and what was he thinking when he said it?
So the president tends to get loose when he's talking at political fundraisers with donors, and he did just that yesterday evening in Park City. He went on a tangent about China and said that the country's economy is a ticking time bomb, that they are struggling with demographic issues, with lower growth, and that, to paraphrase, that when bad things happen to bad people, they do bad things in return. And so sort of a warning shot, not only, about what the situation is like with China, but on, that's just another clarification of like how the president personally views China, even as the administration's trying to achieve a rapprochement with the Chinese government and hopefully set up a meeting between Biden and President Xi later this year.
It sounds like the edit function was off. It's happened to all of us. Hey, Tom Orlik, come on in on this. Though, does President Biden have a point, though? Is the Chinese economy a ticking time bomb?
So, President Biden is clearly correct that there are a number of really serious problems in China right now. You've got all the distress in the property sector, and we just heard about how Country Garden, one of China's biggest developers, could be defaulting. And because property is the most important driver of China's growth, when you have problems in property, you have problems everywhere else as well. So we've had trade data showing China's commodity imports coming down because they're not building so many houses. We've had loan data showing a big slump in credit because when the property sector is going down, confidence takes a hit and folks don't want to borrow money, don't want to start new projects. So President Biden is correct that there are some really, really serious problems which China's policymakers are confronting. Does that mean that China is a ticking time bomb? Well, I wouldn't go quite so far. If we look at the track record of China's policymakers of dealing with problems without major blow-ups, well, they do seem to be pretty good at it. My suspicion is that in the years ahead, China faces a continued slowdown in growth. But is China going to blow up? Is China going to have a kind of Lehman moment like the US did in 2008? I think the answer to that is probably no.
Jordan, I want to bring you back into this conversation because the Biden administration this week did issue an executive order barring some new U.S. investments in China in sensitive technologies, including chip makers, obviously, that have been on a tear in the U.S. stock market this year. When you're speaking with your sources, how much of this is a potential issue for our economy?
Yeah, this really encapsulated the delicate dance that the president has with China. He has been talking about doing this kind of order for over a year now, even longer. And the first iteration of this was much broader and deeper than the final version was. And that's really because he, again, wants to set up that relationship, get those ties back to a certain level. Whether that's going to, and like whether these, I guess, outbound investment restrictions are going to affect the economy, I think remains to be seen. Even though the terms of the order itself are narrow, it could have a broader chilling effect on firms looking to invest in companies working on technologies like AI and quantum computing. They might read that and sort of get confused, say, what is really, half of a company's income on these subjects and just decide not to invest at all. Well, it'll take time to see whether that dynamic really plays out.
And Tom, when it comes to, obviously, the Federal Reserve here, is there any way that with China's growth actually slowing, does that in some ways make the Fed's job easier when it comes to the inflation fight globally?
So the big issue for the Federal Reserve when it comes to China is how much is China's growth going to contribute to global inflation? Now, the fear at the start of the year was that if China came roaring back from its COVID lockdowns, what that could mean is surging commodity prices, higher oil prices, higher prices for soft commodities like soybeans, and that could give an additional impulse to inflation at exactly the moment when the Fed really didn't need an additional impulse to inflation. As it happens, China did roar back in the first quarter, but that momentum has really faded extremely quickly. If you look at the trade data, if you look at the credit data, if you look at the price data from China, it's pretty clear that the challenge for China right now is that momentum has stalled and growth is weak. And what that means is that China's not giving that impulse to global commodity prices. So the Fed's still got some work to do to bring inflation under control. But China, if anything, is going to be giving an assist on that project.
We've got about a couple of minutes left, and I do wonder how the two of you think about both China and the U.S. getting lost kind of politically. We've got an upcoming presidential election, so maybe President Biden thinking about, voters and maybe what they want to hear when it comes to being tough on China. President Xi also, thinking about his own stance politically in his country at a time when probably facing more struggles than before. And I do wonder, will the political focus potentially create more problems for these two superpowers that in many ways, many would argue still need each other? And Jordan, you take that question first.
Yeah, no, I think you bring up a good point, which is that the political climate in the U.S. doesn't really lend itself to some sort of broad thawing between the U.S. and China. The electorate is still pretty angry at China over its economic practices and also the COVID-19 pandemic as well. And you have the President Biden's chief rival Donald Trump, railing against China, and that's going to put pressure on Biden to respond in kind. And so you can look at the kind of the comments that he made on Thursday night and say this is really for domestic political consumption. But also, President Biden is an old school Democrat. People like him and Chuck Schumer have long been skeptical of China. So this isn't necessarily coming from a disingenuous place, but it does show the limits of what this administration can achieve.
Hey, Tom, saved you about 40 seconds. Same thing, I feel like President Xi has more pressure on him than he has in a long time.
So, first of all, I completely agree with Jordan. Trump demonstrated in 2016 the salience and the resonance which the China issue has with U.S. voters. I expect him to be hitting that theme really hard on the campaign trail in the next year, and I expect Biden to be hitting the theme hard as well. The risk there is that they're buying a few more votes here in the United States at the expense of a bunch more risk in the China relationship. For President Xi, well, China doesn't have elections, but it does have politics. And a president in charge of a slumping real estate sector, don't forget that Chinese households have almost all of their wealth in real estate, has some political challenges to face.
Listen, both of you wrapping up what was a full week when it comes to U.S.-China news. Guys, thank you so much. Jordan Fabian, White House correspondent, Bloomberg News on the phone in D.C. Tom Orlick, of course, chief economist at Bloomberg Economics in our D.C. bureau. Check out his column about the U.S. is wrong about China. All right, now let's get a check on world and national news. We stay in D.C. with Nancy Lyons.
Thanks, Carol. Attorney General Merrick Garland says he's giving special counsel status to Delaware U.S. Attorney David Weiss in the ongoing investigation into President Biden's son, Hunter. Garland says Weiss will now operate outside the normal chain of command.
As special counsel, he will continue to have the authority and responsibility that he has previously exercised to oversee the investigation and decide where, when, and whether to file charges.
Attorney General Garland says the appointment of the special counsel reinforces the department's commitment to independence. The federal judge overseeing Donald Trump's 2020 election interference case says there are limits to what the former president can publicly say about the investigation. U.S. District Judge Tanya Chutkan today said while Trump does have a right to free speech, his free speech is subject to rules in the criminal case. We're also learning a judge has revoked bail for FTX founder Sam Bankman-Fried. Apparently, the judge says the crypto mogul tampered with witnesses in his fraud case. The 31-year-old has been under house arrest at his parents' California home since being extradited from the Bahamas on charges that he defrauded investors in his businesses. Hundreds of people are still missing after wildfires turned the historic Hawaiian town of Lahaina into ash and rubble. Maui Mayor Richard Bisson says they are still in the middle of a search and rescue operation.
We have not yet searched in the interior of the buildings. We're waiting for FEMA to help with that search as they are equipped to handle the hazmat conditions of the buildings that have been burned.
Mayor Bisson says the official death toll still stands at 55. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 3:40 on Wall Street. We check the markets for you all day long at Bloomberg. Stocks are mixed, and we have this headline getting a lot of attention on the Bloomberg terminal about FTX co-founder Sam Bankman-Fried. He will likely have to report to jail after a federal judge said he would revoke his bail because of a series of leaks. So we'll have more on that coming up in just a few minutes with our Nancy Lyons. Meantime, inflation headlines dominating. And now we go over to the First Word Breaking News Desk for today's afternoon call. Here's Bailey Lipschultz. Bailey.
Yeah, good afternoon, Denise. As you said, stocks are mixed and heading for a second straight week of losses in what's been a quiet session. The Dow is up 120 points. S&P is little changed, while the NASDAQ is falling 75 points. The U.S. 10-year yield is at 4.17%, and small caps are flat on the day. 7 of the 11 main S&P sectors are trading higher, led by gains in energy and healthcare, while tech and communication services are the worst performers. NASDAQ biotechs are up 15 points. Transports fall 20. Semis are down by 80 points, while the VIX is lower by 5%. Leaders in the Dow, Merck, Chevron, and American Express, while Disney, Dow Inc., and Nike are the worst performers. On the earnings front, News Corp rose to a 6-month high as results topped expectations. IonQ rallied 11% after boosting its bookings forecast for the year, while Soho House rose as membership revenue topped expectations. In other news, Illumina fell after disclosing an SEC probe, and Wynn Resorts shut down its sports betting app in 8 states. Wrapping things up, Aptiv fell amid concerns about strikes at automakers like GM and Ford. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Denise?
All right, thank you, Bailey. And to hear live breaking news over your Bloomberg terminal, type SQUAK on that Bloomberg terminal. And that is a Bloomberg Business Flash. Back over to you guys.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 18 minutes left in today's trading session. Getting ready to wrap up the trading day and the trading week. As we said, though, it has not been a sleepy summer in this week of August, as we just heard from Denise Pellegrini, FTX co-founder Sam Bankman-Fried, likely having to report to jail after a federal judge said he would revoke his bail because of a series of leaks. So we're going to get more on that story in just a moment. In the meantime, we do want to get to the trade as we are nearing the close on this Friday. And we've got stocks bouncing around, little changed as we speak, definitely off their best levels of the session. Feel like, though, it's another day where we're focusing on the yield curve and treasuries, to be specific. They moved up following a PPI report that definitely had some cause for concern. So let's get to it, and let's get into the drive to the close with Dana Dioria, co-CIO of the publicly traded wealth management fintech Envestnet. Their clients have $384.8 billion in assets under management. She is with us on Zoom in Pennsylvania. Dana, good to have you here with us. Remind us about what you guys do and the clients that you work with.
Hi, thank you for having me. Yes, we're very much an asset manager and platform ecosystem, financial ecosystem for the advisor. So in terms of how we think about markets and the clientele we work with, it's all about advisors and retail and institutional clients who are working with advisors for their retirement, college planning, any and all investment related needs.
So can I just to follow, in terms of the tone that you're getting from those clients right now, retail, institutional, or other, what is it? Is it a more cautious one, a little nervousness about kind of the all-in enthusiasm, it seems like, from strategists and economists who are pulling off the recession call? What is it?
It's interesting because we started the year with sort of, this kind of broad-based concern about recession coming, a lot of, expectation that maybe mid to second half of the year. And of course, that didn't materialize. And by the way, also a lot of movement, as we all know, into cash, money market, fixed income type instruments, a lot of you know, a lot of the asset managers, we work with hundreds and hundreds of asset managers, a lot of interest in fixed income. But of course, none of that materialized, right? We saw great equity performance in the first half of the year and sort of a FOMO type interest takeover. And, you know, money kind of pouring into, you know, the S&P 500 and the QQQ, et cetera. So I think, you know, you've seen this shift. And now, of course, you know, I would say there's more of a case to be made for a potential soft landing or maybe a calmer, you know, if there is a recession, maybe less impactful. But, you know, we're not out of the woods. And certainly there's a sentiment that we still have to kind of be cautious. A lot of, you know, as you know, a lot of economists are kind of pushing out their call, you know, maybe not taking it off entirely.
What are you seeing in terms of positioning when it comes to your clients when you're looking at, say, the equity markets versus fixed income? Also, I know money markets have been such a hot topic, especially being able to yield more, but people have been questioning when is more of that money, which is at around a record, going to move over more to the equity market?
Yeah, so I think we are seeing some of that, right? Where in spite of, yes, flows to money markets, because of course now you can get yield there that you couldn't previously get. And, you know, that's, I think, impacted on interest in dividend payers and, you know, where you were looking to equities for a long period of time for income. Now you're getting that from fixed income. So we've seen that. But there has been a shift then, you know, again, that FOMO idea where, you know, you see an interest in just making sure that your equity position is positioned to pick up. And, you know, unfortunately, people kind of chase returns, right? This is just a phenomenon in markets that goes on forever. And, you know, what we're advisor-based that's responsible to keep that client disciplined in the portfolio and live through any kind of market volatility. Their job and their focus is, you know, is the client in the right risk tolerance.
On the retail side of things, especially retail clients, I'm just curious if you're seeing as people, individuals who maybe have college loans, maybe working, trying to invest, but getting ready to resume payments, that they aren't going to be investing as much.
It's an interesting question. I think, you know, there is sort of a lull a little bit that you're seeing kind of within the industry around, you know, dollars going into equity portfolios in general, kind of just in terms of growth, I'd say, right? So not talking so much now about existing, but you know, positioning of existing, but just the growth that you would typically see. And I do think that, you know, cash equivalents are kind of driving a lot of that. We also, you know, one area that we have started talking about more when you're thinking about a true financial ecosystem and all the different parts of the portfolio that the client should be considering, you know, credit options are an area that I think, you know, we're seeing increasing interest. This is an area where a lot of wirehouses already have, you know, a standard sort of credit line type, and independent advisors working with Envestnet are looking at ways to access that as well. Because of course, as you're thinking, okay, you know, how do I kind of how do I proof the overall portfolio for recession? Part of that may be, hey, I want to establish a credit line now while I can do that, you know, in case of, you know, issues in my job or, you know, potential where I don't want to have to sell out of my holdings, but I may have cash flow needs that I need to meet. So it's interesting just the ways that, you know, advisors prep.
All right, we're going to leave it on that note. Dana, thank you so much. Dana Dioria, co-CIO of the publicly traded wealth management fintech Envestnet, joining us on this Friday on Zoom in Pennsylvania. You are listening and watching Bloomberg Business Week. Carol Master along with Jess Metton, and this is Bloomberg. All right, everybody, we do want to get to, as we said, we were breaking down, Denise and myself and Jess here, talking about some headlines that crossed about 3:19 p.m. Wall Street time. And this has to do with FTX co-founder Sam Bankman-Fried likely having to report to jail after a federal judge said he would revoke his bail because of a series of leaks. Having said that, since then, Bankman-Fried was handcuffed and taken into custody in Manhattan. That was a Bloomberg headline that crossed about 3:44 p.m. Wall Street Times. So just really minutes and moments ago. To make some sense of it, joining us right now in our Bloomberg Interactive Brokers studio is our own June Grosso. She is host of Bloomberg Law on Bloomberg Radio every evening here on Bloomberg Radio. She's also our Bloomberg News legal correspondent. So June, first of all, remind us about the FTX story and the importance of this, or talk to us about the importance of, having your bail revoked by a U.S. judge.
Well, this is such a surprise. Sam Bankman-Fried is out on a more than $300 million bail package. It's one of the biggest bail packages around. Until a few weeks ago, we had a billionaire who had a $400 million bail package. So what happened is there was an article published in the New York Times that really got prosecutors upset, because in it, Bankman-Fried revealed some personal writings of Carolyn Ellison, his former girlfriend, who is going to be a star witness for the prosecution. And the prosecution contends that he was trying to intimidate her or trying to sort of knock her down before the trial. And they initially it started as they wanted a gag order against him. So when he came in last week, they were asking for a gag order, and then suddenly it surprised the defense completely that they asked the judge, no, instead of a gag order, we want him in prison pending trial. And that is a hardship for a defendant, A, because he was living with his parents in California, but B, to go into, New York's system before a trial, and you don't have contact with your attorney as much as you like. You have to prepare in different kinds of settings. Your attorney can't get you all the time. It really can hamper the preparation for trial. So it's really surprising.
It doesn't happen? It's rare?
Oh, it does happen, but not when you have there's no allegation that he was attempting to flee. There's nothing like that, which is usually the reason for why they'll revoke a bail package like this. They say that he was attempting to contact witnesses, and the judge said, well, we really can't trust him at this point. So they took away his bail. And right away, I'm sure he didn't, when he got there, I'm sure he didn't think that he was going to prison. And considering how strong the case is against him, one wonders if he'll ever come out for years and years.
So this means he'll remain in prison until the trial starts?
Yeah, he'll be in jail until his trial starts in October. I think it's October 7th. So, yes, he'll be in jail. We've all seen it in movies. They'll bring his clothes in to prepare him for, to go to trial, and they'll have to go into the rooms that are provided to prepare his trial. So it's very shocking that the judge would do this, especially considering that his bail is so high.
Yeah, did the judge, and we're talking about U.S. District Judge Lewis Kaplan, correct?
Yeah.
Who made the order at a hearing in Manhattan this afternoon, and then Bankman-Fried immediately placed in handcuffs as his mother apparently cried in the gallery. This is coming from a Bloomberg News story doing some reporting. Remember, as you said, massive bail package. Did the judge have to do this? Was there leeway? Help us out with legal understandings.
I think there was leeway. They hadn't imposed a gag order on him until the prosecution complained about it. And so they could have seen how that worked out. And it is sort of surprising. Also, his defense attorneys argue that he had a First Amendment right to talk to the press, to say things to the press. There was no violation. They were his papers that he was showing to the Times. So it wasn't that there was a violation. Also, they say that he has talked to Michael Lewis, who's writing a book about the implosion of FTX, and that is coming up soon. But yeah, I think that there were other ways, in my opinion, and certainly in defense, he was talking to the press. People are allowed to talk to the press, and there was no allegation of anything that was revealed that was devastating. I didn't see it. But
Michael Lewis, by the way, a Bloomberg opinion columnist, so we often read and write, or he writes certainly for the Bloomberg team here.
Have you seen any sort of precedents like this happen before with such a high-profile case?
I'm trying to think. I'd have to really
so
look back and see
unusual.
if to withdraw. It's unusual. I can't think of a high-profile case where it's happened, but I'm sure there are cases where they revoke someone's bail. I'm thinking of. That's a tough question. I have to do research on it.
Well, there's a lot coming in, and it's breaking, and making some sense of it. Bankman-Fried's lawyer, apparently, Mark Cohen, when he argued that his client didn't intend to tamper with witnesses, the Judge Kaplan, asked him about a scenario where, quote, two guys walk into a store and say to somebody, "This is an awful nice store, and it would be a shame if it burned to the ground." I don't know.
as I said, that seems like a very, that the judge is making an analogy that's a little far off from what happened here, because...
Except, it's interesting. We live in a time, and we talk about this with former presidents, the former President Donald Trump, who's also under, many indictments, and just, this idea that people didn't used to, I feel like, go back years, not talk. They respected kind of these orders, right? But through social media or just things coming out, that can be very fearful for people who are maybe turning evidence or going against a defendant.
The thing is, though, that this happened before the gag order was put in place, as far as I know, so that the judge didn't even give him time to prove that he would obey the gag order. So that's why it's even more surprising. And I think, his mother and father have not been coming to these hearings because he flies in from San Francisco. She came to this one, I think, showing how important she knew it was going to be.
On the gag order, the judge saying not a workable solution, longer term, particularly with someone who has shown a willingness and a desire to risk crossing the line in an effort to get right up to it, no matter where the line is. So there was obviously something prior to this.
There was another instance a while ago where they said he tried to contact a witness, and then so the prosecution, but it was very surprising when the prosecution asked to have his bail revoked at a hearing where he thought he was going to agree to a gag order, and his lawyers thought that too, and they said they found out a minute before the prosecutors asked for it and had the papers ready that so I don't know, it seems a little odd is the only word I'm going to use right now until we learn more.
It's fair, yeah.
We have a little under 2 months until the trial. What other sorts of twists and turns should we be looking out for in this case?
Well, I guess we'll look for different kinds of motions of, what evidence can come in and what witnesses are going to be testifying. But this is really, I think, going to affect him in a lot of different ways. The first time he's been jailed for so many months. And
I think there's a difference, as you said, when you are handcuffed and then said you're going to remain in jail, and that's how you're going to prep for the case here.
And the judge wouldn't even allow his order to be delayed. The defense said, well, delay your order, please. And he said no. So you're going right to jail.
All right, very interesting. As we said, it ain't a sleepy August, is it, June?
No, today. What happened? A special counsel was appointed today?
June sits next to me in the newsroom, and she's like, oh my God, now what? It's not been quiet. June Grosso, we always appreciate, host of Bloomberg Law. Catch it on Bloomberg Radio, 10 o'clock every...
10 o'clock.
10 o'clock Wall Street time, so catch it. And of course, our Bloomberg News legal correspondent as well. Carol Master, along with Jess Metton. The close coming right up. We're heading over to Beyond the Bell.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell, and here they'll take us beyond the bell. It's a global simulcast with our friends Carol Master and Jess Menton. Welcome to our audiences across all of our Bloomberg platforms on a Friday afternoon to close out the week that I think could really be characterized by kind of a loss of momentum, Carol.
Yeah, I really feel it. And, it's funny, we were saying dog days of summer, but it feels like there's been a fair amount of news flow, but it does feel like with the markets, there's a little bit of a slowdown in that momentum, and we see these erratic days, and I feel like until we get some more clarity, maybe it's Fed policy about the outlook, recession, no recession, despite all the no recession talk, I feel like we need some clarity here, Jess.
And especially next week, we're going to start hearing from the retailers. So we have Walmart, Target, Home Depot all on tap, so that's going to give us some more color into the consumer and what that means for the economy.
A nice reminder that earnings season never ends. I'm just excited. At this point, it's August 11th. I'm just looking forward to Jackson Hole. It feels like we do have those earnings, but we're going to really struggle for catalysts here.
Yeah, not a lot of catalysts, and maybe that leaves the markets to its own devices, I guess, if anyone's still around to trade this. But what exactly are you trading? Are you buying into valuations? Are you buying into growth? What?
I don't know. You said Dow outperformance. So apparently we're buying the Dow Industrials right now. I mean, that's where investors are committing some money. I mean, that's the only major index right now in the green.
I'm not sure I like your tone of voice. Respect the Dow Jones Industrial Average. I mean, it is the OG of price-weighted indexes. We should point out 21 of the 30 members in the Dow Jones Industrial Average are higher on the day. That includes some pretty interesting moves by Chevron, Merck, Verizon, American Express, and Honeywell. You put it all together, and it's up on the day by about 0.3%. And it's the one bright spot on a weekly basis as well. As for the other indices, we're down on the day for the S&P 500, down only about 0.1%, but also down on the week as well. The NASDAQ composite lower by about 93 points, or 0.7% on the day. And the Russell 2000, actually a slight bright spot here. Looks like it's going to close out the day higher by about 0.1%.
All right, looking at the S&P 500, almost an even mix. 278 names, to the upside on this Friday. 222 to the downside. 3 unchanged. Katie.
And you take a look at the sector level, even though the index was only down by about 0.1%, you take a look at the sectors or the industry groups here. I'm not quite sure, but anyway, the sectors: energy up by 1.6%, healthcare also doing well, utilities. But at the bottom, you can see it there too. It was information technology, some of your big tech names really acting as a weight on this index, even though you had plenty of names in the green.
All right, so let's get to it. Yeah, I had a fair amount of names to choose from today. Let's go to News Corp. Top in the S&P 500 on this Friday, pretty much finishing just off its best levels of this session, up 4.7%. Snuck up as the company reported adjusted EPS beat. It did have a sales miss, however. Cost cuts really driving, though, that earnings beat. And for the first time, digital accounted for over 50% of News Corp's revenues for the full year. So digital focus, definitely something that analysts highlighted. And this stock, I should say, trading on some pretty heavy volume. All right, want to go to Rambus. It was also rallying up about 6% in today's session. The semiconductor device company began a $100 million accelerated stock buyback program. So investors moving into that one. That stock up just about 48% so far in 2023. And drum roll, please.
What's that?
That's kind of lame. Eli Lilly is your best performing name in the S&P 500 for the week. Overall, up about 17%. And we did see that name add another 1.4% in today's session. We know the news. Everybody's talking about these weight loss drugs. And Lilly did boost its outlook of its promising weight loss treatment earlier in the week.
Have you tried one of these drugs yet?
What are you saying?
No, I didn't mean it like that. I mean,
no, I actually haven't. I actually, stepped.
I mean, I feel like everybody's on it. I mean, they're not supposed to be. Everyone can. Well, every single one. I don't overstate.
Well, I know people who have diabetes who are on it, and it's kind of a game changer in even like leveling out their levels. So that's the healthcare side of it.
Yeah.
I'm not on it. I'm just vain and I try to stay thin.
I'll take the decliners. Taking a look at U.S. listed Chinese shares, specifically JD.com, looking at that down 5%. So it's worst day since June 20th. So Chinese property giant Country Garden actually issued a profit warning. So you are seeing stocks like that, as well as Alibaba down that stock as well, 3%. So another one is Cano Health. So it's a healthcare provider. Looking at that stock, it dropped 73%. So it's worst drop on record. And the company did warn that it doesn't have enough liquidity, unfortunately, to cover its operations for the next 12 months. And it also said that it would restructure and plans to cut about 17% of its workforce.
This is a phenomenal story to me, because this is like one of those big SPAC deals when SPACs were all the rage. And remember, I think it was Barry Sternlicht's Jaws SPAC brought it to public. Well, I mean, it was just 3 years ago, and we're already talking about a going concern.
We are. So seeing that stock pretty much decimated today.
You don't seem vexed by this as much as I am, Jess.
I mean, we got to get through them, because I know you're going to have a pop quiz about the biggest weekly decliner, which, by the way, is International Flowers and Fragrances. Down 20% this week, Romain, because I know you're going to ask me about that, but it's cut its full year sales outlook earlier this week, so that's why it's got pressure.
She's kind of smart, isn't she?
I like that.
I don't know. She's
trying
on,
to get ahead of it.
She's on to me. Let's take a quick look at the yield space, because that really was where a lot of activity was. I mean, you could look at the main yields here. A 2-year yield up about 5 basis points here on the day. The 30-year yield for a change was actually the laggard, only up about 1.5 basis points on the day. But you got to put it in the context of the whole week. What we saw this week was phenomenal. You're looking at a 2-year yield right now that's scraping back at that 5% mark. A 10-year yield firmly back above 4% here. And, of course, all the yields right now, at least the major ones on the curve, above 4%. man. And I know, Katie, you've been talking a lot about this, the real yield. They should do a show about that.
Yeah.
I mean, this is pretty fun. You're talking about 195 on a 30-year real yield right now, back to that 2% level. I don't think we've been there in probably, what, 2011 or something?
At least 2011.
It's been quite a time here. And I thought yields were supposed to be going in the other direction right now. I've been misled. What's
A lot
happening?
of people had bet that duration now was the time. It's kind of been a face-ripping move over the past month. That real yield, though, that 30-year real yield, Carol, maybe you missed this, but Bill Gross did not believe me when I mentioned that level. It really is sort of a sign of the times of how dramatic some of these moves have been.
It was actually funny. What was it that you called? Oh, not that you called him out, but there was something, right? Was it the 10-year or something?
No, I think it was the 30-year.
Or was it the 30-year? And he's like,
yield.
oh, yeah, Katie, you were right.
I did go back and check because, again, these are some pretty amazing levels. And it's going to be interesting on nominal yields whether we pass that ceiling that we set last fall. And again, some of these long duration yields.
We have had some market guests coming on and saying that when it comes to the fixed income side, that they are pushing out slowly on their duration, right? Everybody was so afraid to go further out along the yield curve, but they are getting some confidence. And so they're looking at some of their investors' portfolios and saying, okay, so maybe if you were, I don't know, 2 or 3, maybe we go out a couple years. Like they're feeling a little bit more confidence, whether it's on corporate bonds, whether it's on the treasury curve. So they're willing to play around a little bit.
Well, I am curious then, I mean, kind of what becomes the catalyst for this market? Because, I mean, this was, of course, all about those economic reports and the reaction in the treasury space. We don't really have the luxury of that. I know we get retail sales numbers next week, and we get, as Jess, I think Jess was the one who mentioned it, we get some retail earnings like Lowe's and Home Depot and was it Walmart, TJX, a fan favorite?
Yeah, Home Depot is coming up on Tuesday, then we'll have Target Wednesday, and then Walmart on Thursday. So it's going to be jam-packed. The following week, we'll actually have Macy's as well. So you can't get away from those retail earnings, even though we think we've gotten past the majority of earnings season, Katie.
And I'm excited to see what sort of commentary there is on pricing power and how much consumers are still willing to stomach right now. Because again, we go back to the story of the economy. It's been that resilient consumer, miserable but spending. It seems like we've been starting to test the limits of pricing power.
But Barclays is raising their outlook for retail stocks this year.
Really?
Yeah.
But then I was looking at the UMich data, the University of Michigan Consumer Sentiment data, and those projections of whether people are going to buy things, major things going forward. That's starting to slip here.
Yeah, it's interesting. Well, we're also going to get some housing data next week, and I feel like housing has started to be, or has been, some outperformance in a big way. And I do wonder whether or not we see the strength continue, and what that means as a sign of the economy.
I have a pop quiz for Jess Menton here.
Here we go.
What was the best performing major indice in the world this week?
Oof. Tell us.
She's just like, whatever. It was Copenhagen.
Oh.
You would never have guessed that. Up 9%.
What was the worst? What was the worst, Romaine?
What was the worst? It was, I don't even know what this is. OMX. I don't even know what the OMX is. What is that? I got to look this up.
I don't know.
You stuck me. I'm looking at it. I have it right in front of me, and I can't even tell you what it is. So,
I don't know.
Pop Quiz Friday.
Yeah, Pop Quiz Friday. I think you should put this as part of the Bloomberg quiz next time. That was Stockholm.
So, no kidding.
Interesting. So Copenhagen, the best performer in Stockholm.
A lot of action.
Yeah, interesting. Okay. All right. If you say so.
In keeping with the retail sentiment, maybe this weekend, Romaine, you'll go out and buy those man prees finally.
Oh, will you stop with the man prees?
Come on.
How many pairs do you have?
Come on. I have none. Zippo. All right, guys. Have a great weekend. Stay safe. Be well. And we will see you again. Cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. We'll see you on Monday, everybody.
Mama told me you better shop around.
We are going to do some shopping around because, as Jess just mentioned, and we talked with Romaine and Katie, it's a big week next week for retailers. Jess, you mentioned Walmart, Target, Home Depot, Macy's, Ross Stores. I can never say it. TJ Maxx. They're all coming out. Retail, right? It's a lot.
Yeah.
Retail stocks, I don't know if you looked at the group. I'm sure you have.
I have.
30% for the year.
And also, if you look at the specialty index for retail in the S&P 500 since late May to now, it's actually outperforming the S&P 500, up 16%, and the S&P is only up about 7% in that span, so double that.
So what does that mean?
Right. What is that telling us? I mean, potentially that could bode more well for those stocks that we didn't think would do at quite as well in that particular span over the summer, just because of all those concerns about the health of the consumer and all of this debate around a recession. Right. People are still shopping, Carol.
People are shopping. All right, so let's get to it, and some things to keep in mind when all those retail numbers cross the Bloomberg next week. With us is Mary Ross Gilbert, Bloomberg Intelligence Senior Retail Analyst. She joins us on Zoom in Los Angeles. Mary, thank you so much for joining us. In general, let's start there. We know there's some companies that are really in your space, but in general, how is retail doing? What are some of the trends? I mean, we talked earlier with our TV colleagues about the Halloween industrial complex already getting underway at some retailers and some places. But generally, when you look at retail, is there a way to describe it? I think we may have our Zoom frozen. Okay, so we're hoping we're going to get to her, and we'll get to her in just a moment. But, I always feel like it's like real estate, Jess, when we talk about retail, because it's, for real estate, it's location.
It is.
For retail, malls are different from the big box retailers versus specialty versus maybe those that specialize in clothes versus, some other stuff.
It's all very different, and also depending on where we're talking about the consumer spectrum and who's buying there. And also, I know that she covers Macy's. There's one of the companies that cut their outlook on demand trends actually back in June, and then Target had its own particular issues where people just weren't spending as much on the same discretionary type items. So a lot has come up about the different types of ways people are spending coming out of the pandemic, right? And where they're trying to spend more on experiences versus some of these other discretionary goods. But also Home Depot saw some issues where it came to, in the springtime, not as much discretionary spending, and obviously the bulk of their customers are on the home building and a lot of the
contractors,
right, exactly,
the professional
and then
space.
also people who are homeowners. But in the past few months, we've seen retail sales actually hold up a lot stronger than what economists were expecting. We're still seeing those, when it comes to wage gains, outpacing inflation. And so that's caused some people to expect that potentially even Barclays is one of them, calling for potential retail stocks if you're thinking about the Gap, which has gotten really hurt in recent years.
Well, hold on a second, because we do get a read on retail sales next week, right?
Yeah.
So we're going to get that for the month of July. It's a little bit, it's last month, right? We're just coming off of it. And we're looking at the survey saying an increase of 0.4%. And that compares, that's the headline number, that would be double what it was the month before.
Yes.
That's pretty strong.
Right. And also, we are in the current quarter for back to school shopping. So that's going to be expected to be more of a beneficial driver. And especially, as you know, the final quarter of the year is the big gangbuster year when it comes to holiday spending. We might not get a ton of information on the outlook of that yet. And also, when I've been speaking with my sources, they don't really feel like the retailers are going to come out and dramatically increase their expectations, because it's the whole game that we always see with earnings season, right? Where you sort of lower the bar or keep it more, not necessarily pessimistic, but you don't want it to raise it so much to where, right, it's more measured to where you don't completely not hit on all cylinders that what investors are expecting on. So I think right now it's really, especially when you're thinking about Target, Walmart, back to school shopping.
All right. I think we've connected with Mary Ross Gilbert, so let's bring her in. She's Bloomberg Intelligence Senior Retail Analyst on Zoom in Los Angeles. Mary, hopefully the technology works. So good to have you.
Technology works.
All right, good to have you here. Listen, so in general, we want to get into and drill down into some of the companies that are specifically on your radar, pretty regularly. But in general, are there some trends that we are seeing when it comes to retail?
I think there are some trends that we're seeing. I think that we have some bifurcation in the consumer where you still have the luxury or the higher end consumer who's able to spend. But I think the revenge spending is probably played out for the most part. So, for example, Nordstrom talked about in their full line store, particularly with the designer business, that it's pulling back, but it's pulling back from the heightened level that they experienced post-COVID, and it was still sort of running ahead of 2019. So they were sort of talking about it normalizing, and so I think that's what you're seeing at the higher end. And I just think that those retailers who are really executing well, providing a lot of newness, and really appealing to the higher end consumer. On the other hand, you have the lower income consumer who's still being crimped by inflation, particularly in food and in fluctuating gas prices.
And so where I think the retailers that are going to benefit there are going to be on the mass side, with a Walmart or a Target. And then also on the apparel side, it's going to be an off price. So that's where I think TJ Maxx is really going to lead there because they really execute, and they are by far the largest in the country. And also, they have a global presence. So I think we're going to see them do well. And I think that also some of the other ones, such as Ross, which is kind of in the mid-tier, so they're more impacted. They don't have as broad of a customer base as TJ Maxx. And at the very low end is Burlington stores. So those that are really going paycheck to paycheck really find value at Burlington. And so I think going against last year's missteps that Burlington experienced with taking price probably when they shouldn't have, that, has been since corrected and their assortments are better. And there's also plenty of inventory out there, and most retailers have cut their inventory, so they're in a good position. But I still see a lot of promotional activity. And when I look at consumer transaction data ahead of these retailers reporting, I'm seeing in many cases that the transactions are sort of the absorbed sales from this data is indicating that that the actual results may come in light of consensus. There might be a few that outperform consensus.
Interesting.
So it just really depends.
What about when it comes to department stores, say like Macy's? What are your expectations, especially with the back-to-school shopping season?
Yeah, so Macy's, that's a good question. First of all, back to school isn't huge for Macy's. Holiday is really huge for Macy's. And they still play in back to school. When I look at the transaction data for the second quarter, for example, it looks like they might have outperformed a tad, not by a lot, but it's also because Macy's really drew back their guidance, by about $1 billion. So that's a lot. So I think they really gave themselves a lot of room so they could outperform.
Right.
I don't think we'll see it really, the outperformance potential until the second half. And that's really how we're seeing it across the board for most retailers, because we're still going against some tough comparisons versus last year, especially when discounting was pretty heavy, and it was heavy again with the second half, but weaker sales last year in the second half.
Mary, 2 quick questions. 30 seconds on Macy's. Is it becoming more of a Sears in terms of where the value is? Is it's real estate?
Well, that's interesting that you say that. Is it becoming more like a Sears because of the real estate versus the retail model? I think that the management team is doing a really good job, but it's still largely mall-based.
Yeah.
But yes, they are rich in real estate. And I think that real estate kind of provides some downside protection, if you will. But the company is diversely different than Sears because they're in a much healthier position.
Right.
So it's not a concern with regard to liquidity, and I just think execution is far superior.
Really, really quick, 15 seconds. TJX, why isn't it up more? It's always crowded whenever I go in.
Every time I go to.
It's like one of my favorite stores.
Yeah, well, I think
Just
what
quickly.
you'll see is, you could see TJX is the one where I think could outperform. They like to, to underpromise, overdeliver. So I think that's one where they could exceed their guidance.
We'll keep it on our radar. Hey, listen, thank you so much. Really appreciate it, and a great setup for next week. Mary Ross Gilbert, Senior Retail Analyst at Bloomberg Intelligence from LA.
And policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Front Row, exclusive interviews with the most influential figures in finance. First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Access the financial world on demand. Hear from leading economists, policy.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:21 on Wall Street. We do check the markets for you all day long here at Bloomberg this Friday. And Sam Bankman-Fried's bail has been revoked, as we've been telling you, by a U.S. judge over leaks. The FTX co-founder immediately handcuffed. We're tracking it all for you here on Bloomberg Markets. And Fox's top lawyer and a close aide to Rupert and Lachlan Murdoch is stepping down in Fox Corp's biggest management shift since that $787 million settlement of defamation claims by Dominion Voting Systems. So we just got a lot going on in addition to the markets. And as for stocks, mixed reports on inflation, and we had a mixed close for stocks. The Dow up about 0.3% at the close, 105 points. The S&P 500 down 0.1%, about 5 points. The Nasdaq down 0.7%, down 93 points. The yield on the 10-year Treasury 4.16%, so that's where we're ending the week, setting the tone for what comes next week. And you know, all the talk about UFOs and Space Invaders Guide and the hearings and all the stuff that we've had over the years, especially lately, well, believe it or not, there's talk now that a space invasion could be inflationary. This is according to Paul Krugman, Nobel laureate in economic sciences.
I think that we can say almost surely it would be inflationary. Wars almost always are. An uncontested alien invasion, I guess it kind of depends on how they run the occupation. But but actual wars are always inflationary. I can't think of one that wasn't. They always involve big government spending.
And this is serious news, right, guys? I mean, you can hear them laughing, but
is it really,
Space
Denise?
Invaders inflation? Yeah, come on. I mean, they do call it the Odd Lots podcast, right? So I guess it's on brand. But you know, I mean, if Washington is talking about it, yeah, we got to go with it. And,
is that the way you measure it?
Well, I mean, yes.
Okay.
Yes. I think that's fair. And, he has a point. Military spending, that's always inflationary, right?
That's a good point. All right, good stuff. Denise, as always. Denise Pellegrini there with the Bloomberg Business News Flash. I'm Carol Massar, along with Jess Metton. She's in for Tim Stanovic here on Bloomberg Business Week on this Friday. So earlier in this week, there was some news. PayPal rolling out a stable coin, the first by a large financial company, and a potentially significant boost to the sluggish adoption of digital tokens for payments. PayPal USD, issued by Paxos Trust Company, fully backed by U.S. dollar deposits, short-term treasuries, and similar cash equivalents, according to Paxos. So it is pegged to the dollar and will be gradually available to PayPal's customers in the U.S. Actually, I think that's according to PayPal. Anyway, we wanted to get to our weekly look of the world of crypto, and with us, we've got a great voice. Charles Cascarilla is the founder and CEO of that blockchain company, Paxos, and he's on Zoom in Miami. Hey, Charles, nice to have you here with Jess and myself on Bloomberg. First of all, tell us about your company, because you've been doing this for a few years, right? And tell us how your world and everything involving with blockchain, how it has changed over the past few years.
Oh, well, great to be on. Thanks for having me on Friday afternoon here. Paxos, we have, I think, distinguished ourselves from others in the industry by being, firstly, infrastructure only. Secondly, being highly regulated. We have a trust company in the state of New York. And that means that we have great customers that rely on us, PayPal amongst them, but certainly others like Interactive Brokers and Mercado Libre. Venmo also uses us. And this infrastructure role that we play is for crypto assets, but also for tokenizing real-world assets, such as dollars and gold, and we've done other things as well. And so we really look at the transformation of the financial system as enabling blockchain to move assets at the speed of the internet. The economy keeps moving faster and faster, but the financial system isn't keeping up. And we can only imagine what it'll look like in 3 to 5 years, but it's going to require, I think, a totally different type of infrastructure to make that possible.
Talk to us about this partnership with PayPal, because earlier this year, they initially paused the development of their stablecoin due to regulatory scrutiny. So what changed and allowed this partnership to go through?
Well, I think there was a lot of things that happened in the industry, and it was a really difficult time. We had the FTX failure, amongst other things. We had different types of regulatory questions that were raised around the entire industry. And I think as time has gone by, what you've been able to see is that there's a way to be able to operate in the industry. And I think that's with regulation, which is exactly how we've always operated. And, I think that it's exciting to see us move past where we were for the industry over the last 6 or 9 or 12 months into, I think, a new phase. If you look at it, when PayPal launched crypto, and that was during the last crypto winter, they launched crypto, buy, sell, and hold. That was the biggest thing that happened in crypto. And I think just like then, PayPal launching a regulated stablecoin is the biggest thing to happen in crypto and blockchain. And it can fundamentally really shift how the whole economy works and how payments work for everyday people.
Do you feel like, though, that you mentioned all the crypto winter, right, that really just brought everything to a halt? And interesting on a day when we've got some news on Sam Bankman-Fried and FTX, or Sam Bankman-Fried specifically. But what's interesting is I always think about, Charles, stablecoins, not always so stable. And we saw that with Terra USD in May of last year. So what makes this one different and stable? And can stablecoins ultimately really function as money?
Yeah, well, I think, there are different ways to create payment assets. And if you want a U.S. dollar payment asset, it has to be U.S. dollars. And what you saw in a lot of cases is people were saying something was a U.S. dollar payment asset, but it wasn't. So maybe it was backed by nothing like Terra, or maybe it was backed by a lot of other types of assets that weren't just dollars. We do it in a very specific way at Paxos, and it's because we have a primary regulator. We do it in a bankruptcy protected way using a trust company. If Paxos fails, all of our client assets are there. Those are really important protections. And what we do is we basically put it in U.S. dollars, T-bills and cash equivalents that mature in less than 3 months. That means anytime someone comes, they can come redeem for $1. And that type of protection is what gives someone the confidence that it's always going to be worth $1. It always has been at Paxos. We've met every single redemption that anyone has ever come to our company for, and we'll continue to be able to do that. But you have to construct it in the right way with the right type of oversight in order to have the right types of consumer protections. And I think PayPal, ultimately, they're the gold standard. Everyone knows PayPal. Everyone knows they do things the right way. They've engaged with regulators. They've been very, very thoughtful about this. And there's a reason why they want to construct a stable coin in a regulated way. And that's what I think is a fundamental difference from how anyone else has done it in the past. No one who's running a stable coin today or who has run in the past has done it with a primary prudential regulator.
Well, U.S. regulators have been worried when we're talking about stable coins and financial stability and how they are backed by commercial paper. So how do you make sure your customers' money is safe?
Yes. I mean, look, commercial paper is not a dollar. It's pretty close, but it's not. A dollar is really a liability of the U.S. government, and you want it to be one that matures in a very, very short period of time. So that's how we do it. We buy T-bills that mature in under 3 months. We put it in cash and equivalents. We make sure that if it's repo, it's over collateralized by U.S. Treasuries, and it's one day repo. So this is very, very liquid as you can get, and as safe as you can possibly get. And we hold it in a trust company. So the money is always segmented. If something happens and Paxos was to fail, the client assets could be immediately returned to each of our customers.
So who's the primary regulator then?
It's the New York Department of Financial Services. And by the way, they oversee so many sophisticated institutions, from Bank of New York to Goldman Sachs to the Depository Trust Company, which is one of the biggest custodians in the whole world. So this is a very credible regulator. They have set the groundwork. It is very much the gold standard for crypto and for stablecoin issuance.
So whenever you say yours is regulated and others are not, how is it different for the other players in that space?
So what's important is, firstly, we're operating from our trust company, which is a regulated entity. It's actually the same thing as a bank. It's organized under New York banking law, but it's actually safer than a bank because we don't make loans. So all the assets just sit there in trust. And then secondly, we have a primary oversight function from New York. And what that means is everything that we do, not just the issuance, but all company activities are overseen by our regulator. And so that's much, much different than, say, money transmission licenses, where, of course, there's creating some oversight, but it's just on a state-by-state basis, and you're really overseeing the way you're interacting with customers in that state, as opposed to how the product is created and how the product is overseen. That's what makes it significantly different to have a primary prudential regulator, which, by the way, is very much in keeping with the legislation that just passed through the House Financial Services Committee. I guess it was almost 2 weeks ago now.
So help me out here, because in our reporting with this PayPal news, our team putting out how back in February, the New York State Department of Financial Services said it had directed your company to stop issuing a stablecoin branded by Binance. It was known as, I think, BUSD. And the regulator here in New York saying at the time that its decision was a result of, quote, several unresolved issues related to Paxos's oversight of its relationship with Binance. And I think one of the things, and I'm not saying apples to apples, but I think with FTX we realized that there were too many things going on in too many entities and the relationships weren't clear. Your comment to that, and just got about 40 seconds here.
Yeah, I mean, I think the way you should really understand Paxos is that we are an infrastructure provider of regulated products. And we create white label products where other people's brands might be on them. For instance, in this case, PayPal. In that case, it was Binance. And, when you have that going on, there can sometimes be confusion, which we really work very, very hard to try and avoid. And I think clearly in the case of PayPal here, it's really clear how our relationships are working together, what we're trying to achieve. And what we're trying to make sure happens here is that you have a whole new way for payments to be able to move at the speed of the internet, yet at the same time have regulatory oversight.
But safe to say, regulatory oversight, transparency, all of these are key in order for this really to work, because we've seen the problems. Just quickly.
I'll be honest, we want more regulation. We're excited for more regulation. We think there really is no place for unregulated stablecoins. Yep. You're not going to be able to get wide-scale adoption without it.
Well, so glad we got some time with you and look forward to checking in with you again in the future. Charles Cascarilla, he is the founder and CEO of the blockchain company Paxos, joining us on Zoom in Miami. Let's head back to D.C., roll the national news and update with Nancy Lyons. Nancy, take it away.
Thanks, Carol. FTX co-founder Sam Bankman-Fried will be spending the time before his October fraud trial behind bars. Today, the judge overseeing the case revoked Bankman-Fried's bail. Bloomberg law host June Grasso tells Bloomberg Businessweek it was because of leaks to the media.
There was an article published in the New York Times that really got prosecutors upset because in it, Bankman-Fried reveals some personal writings of Carolyn Ellison, his former girlfriend, who is going to be a star witness for the prosecution. And the prosecution contends that he was trying to intimidate her.
Bloomberg's June Grasso says it's an unusual turn of events in such a high-profile case. Well, Attorney General Merrick Garland says he will appoint a special counsel in the Hunter Biden probe. He says David Weiss, who's been handling the case, will take over the role of special counsel.
I am confident that Mr. Weiss will carry out his responsibility in an even-handed and urgent manner and in accordance with the highest traditions of this department.
Garland says Weiss has been looking at the financial and business dealings of the president's son. House Speaker Kevin McCarthy says the special counsel appointed in Hunter Biden's criminal tax case cannot be trusted. The U.S. judge overseeing Donald Trump's prosecution for allegedly interfering in the 2020 election heard from both sides today on how to handle evidence in the case. There's been a dispute over a proposed protective order. Judge Tanya Chutkan ordered that the former president needed to refrain from discussing sensitive details of the case and said she'll take any measure necessary to safeguard the integrity of the proceedings. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
Time. The difference is Bloomberg Law.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law. Difference between political gossip and policy intelligence. Bloomberg Government provides our clients with expert reporting, analysis, and public affairs tools that give you the edge in reaching policymakers on the Hill. When you're in the business of influence in Washington, information and connections are the currencies on which you rely. For knowledge you can act upon, the difference is Bloomberg Government.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Front Row, exclusive interviews with the most influential figures in finance. First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:40 on Wall Street. We check the markets for you all day long here at Bloomberg. We've had a lot going on today. Stocks closing mixed after mixed reports on inflation. Also, FTX co-founder Sam Bankman-Fried, he has been taken into custody after a federal judge revoked his bail less than 2 months before his scheduled fraud trial. We'll have more on that coming out throughout the program here. Fox Corp's top lawyer, meantime, and a close aide to Rupert and Lachlan Murdoch. He is stepping down, and this is in the company's biggest management shift since its $787 million settlement of defamation claims by Dominion Voting Systems. And also, of course, we have that Hunter Biden probe widening with special counsel appointment. We're tracking it all for you here on Bloomberg Radio. And as for inflation, Andrew Hollenhorst, he's chief U.S. economist at Citi, and he says there's really a growing sense now that the Fed may have to keep those interest rates higher for longer.
If the Fed is going to be finishing up rate hikes, and pretty much everyone thinks either they're done or maybe they're going to do another 25 basis points in November and be done, then we're looking at where does inflation go from here, and do Fed officials just need to keep policy rates higher for longer? I think that's a discussion that we're going to increasingly be hearing amongst Fed officials, is increasingly going to play out in the market, this idea that maybe just the neutral policy rate where policymakers need to leave Fed funds in the longer term is going to be higher.
And that's Hollenhorst with us there on the Bloomberg Surveillance podcast. The Dow closed up about 105 points, close to session highs. That's up about 0.3%. The S&P 500 down about 0.1%, down 5 points. The Nasdaq down 0.7%, down 93 points. The yield on the 10-year right now 4.1581%. Pretty much inching higher all day long. NYMEX crude and spot gold, they also closed higher. And that is a Bloomberg Business Flash. Carolyn Chess.
All right, Denise, so appreciate it. You're listening and watching Bloomberg Business Week. It is Friday. Carol Master along with Jess Menton here in our Bloomberg Interactive Brokers studio. Jess in for Tim Stanovic on this Friday. So I don't know if you saw this, Jess, but earlier in the week, Bloomberg's Joe Constance writing in the Workshift Weekly newsletter about how almost exactly 1 year since quiet quitting took over the news cycle, there's a new workplace catchphrase that's entered the corporate lexicon, and it is called lazy girl jobs. Have you heard about this?
I've heard a little bit about this, and I feel like it's definitely beyond the trend because of pandemic and especially the younger generation, right?
It's just like your job, right? Low stress.
Oh,
low effort roles, pay decently well. And they allow a lot of freedom and flexibility.
Yeah.
Yeah. Okay. She's not going to say anything. Anyway, let's talk about it because it is the new It Work trend. Back with us is Catherine Minshew. She's founder and CEO of The Muse. She's on Zoom in New York City. Hey, Catherine, good to have you here with us. It is interesting how we keep going post-pandemic, how we describe kind of the work world. Talk to us about lazy girl jobs. I kind of am a little taking aback. Maybe it's because I just saw the Barbie movie and I'm not loving this. But anyway, tell me about lazy girl jobs, what exactly you're seeing and what it's all about.
All right, so first let's define the term. Lazy girl job is a term that began on social media. It's incredibly popular on TikTok right now, particularly among Gen Z candidates. And the term defines a lazy girl job as one that can be done from home, comes with a fairly laid back or chill boss, ends at 5 p.m. sharp, so kind of classic working hours, and earns between 60 or 80K a year. I think it's a sort of half serious, half tongue-in-cheek celebration of not doing too much or trying too hard. And you can imagine for a lot of people, and especially women from other generations, the generation of lean in and hustle culture and girl boss, that the lazy girl job trend is very controversial.
Talk to us about how you ended up starting this, because you did major in political science, you learned multiple languages, you worked for U.S. Embassy in Cyprus, and then you also ran a vaccine introduction in Rwanda. So really unique experiences. What changed there to drive you to this particular
You don't sound like a lazy girl.
No, not at all. That does not sound lazy.
I personally do not identify with the lazy girl job term, although I can talk a little bit about why so many people do. But, personally for me, I'm what you'd call sort of an elder millennial. And I was someone who always wanted to love what they did, always wanted to find a career I was passionate about. And so, as you just said, I tried a lot of different things in my path. And for me, starting the Muse really came out of the fact that it's hard to figure out what you might love in a career. A lot of people don't land in a job right away that they care about, that they're passionate about. And, when I was coming out of these career moves in political science, management consulting, vaccines, I thought, why is this so difficult? And I was interested in what it would look like to build a technology platform and an online community that could help people make better career decisions. So that's why I started the Muse. That's where the entire ethos of the Muse comes from. But it is interesting, right? Because I think we were built on this idea of love what you do, find work that fits your values, your passions. And there's obviously a lot of trends right now, quiet quitting, lazy girl jobs, which is a little bit of in some ways an alternative. And it's people saying, well, maybe I don't want to work that hard or care that much. It's a really interesting time in the workforce.
All right. So Catherine, on your job placement platform that you have created and worked really hard to get there, I'm sure there's tons of jobs that say lazy girl wanted in my office. I mean, help me out here. Is it like being reflected in what employers are looking for?
So I would say, as I think it's probably obvious, no employers are looking for someone who is out there promoting themselves as a lazy girl. In fact, most employers are still looking for someone who is willing to go above and beyond, is willing to, really get creative about handling whatever is thrown at them, solving whatever problems come their way. So I do think that for younger workers who are out there on social media, branding themselves as a lazy girl or as looking for a lazy girl job could be pretty challenging. It could cause a lot of problems in a job search if an employer comes across that. At the same point, there are jobs that have more work-life balance than others. There are bosses that are more flexible. And so I think when I've talked to younger workers who bring up this lazy girl job trend, I'm like, look, you can advocate for flexibility while still saying, but I'm willing to work hard. So I do think that you're seeing this very interesting kind of clash in what a lot of workers are saying they want and what employers are insisting they need to actually hire someone.
So what's a typical lazy girl job?
So a typical lazy girl job is going to be a remote job, doesn't ask too much of someone, likely is a clean 9 to 5, almost no after hours or weekend work. Often it is a job that comes with kind of a very casual boss, enough money to pay the bills. And I think that I will say there's a deeper statement underneath all the kind of silly social media hubbub, which is that I think the last few years, and especially the COVID pandemic, have caused a lot of individuals to say, hey, life is short and it's precious, and I'm no longer willing to give everything to my employer. At the same point, I think that employers are saying, hey, look, if we're going to pay someone's salary, we do want you to show up. We want you to put in the effort. We want you to care. And so I think there's this interesting tension that a lot of both candidates and bosses are navigating right now.
Yeah, I think it's kind of interesting. And in a tight labor market, there's a lot of interesting nuances that come out, and people and the worker. And I think in many ways, it's good that the worker is in the driver's seat for a while, or should be more so in terms of wages and balance and so on and so forth. But I do wonder, Catherine, in a recession, whether the lazy girl job is going to fly just really quickly.
No, I'm right there with you. I think in a recession, it is not something I would recommend that a worker raise their hand and say, I'm lazy, I want a lazy girl job, even though I'm also right there with you about some of the underlying shifts in the balance of power.
Well, she's never lazy. Catherine, thank you so much. Catherine Minshew, founder and CEO of The Muse on Zoom in New York City. Hey, folks, we do want to mention a headline that just crossed a moment ago, and this has to do with AMC Entertainment Holdings winning court approval of a stock conversion plan that had spurred a shareholder lawsuit and cast a cloud over the movie theater chain's efforts to secure new financing. The settlement was approved today, includes extra shares for individual investors, thousands of whom had opposed it, citing the dilution of their shares among other concerns. That stock, by the way, now down about 30%, Jess, in the aftermarket.
Big move there in after-hours trading, just when you thought there wasn't much left on a Friday afternoon, Carol.
Yeah, and the stock is up 29% for the year, but kind of getting a big haircut in the aftermarket.
company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters in New York, I'm Denise Pellegrini, checking on all the headlines for you. AMC's revised stock conversion plan. It has been approved by a court. The court's approval does clear the way for AMC's recapitalization effort. Meantime, FTX co-founder Sam Bankman-Fried, he was taken into custody. That's after a federal judge revoked his bail less than 2 months before his scheduled fraud trial. And Fox Corp's top lawyer and a close aide to Rupert and Lachlan Murdoch is stepping down in the company's biggest management shift since its $787 million settlement of defamation claims by Dominion Voting System. Amazon cracking down on employees who stay away from the office. We get more on that from Bloomberg's Ann Cates.
Some U.S. employees at Amazon have received an email this week stating that they are not meeting the company's expectation of spending at least 3 days a week in the office. That's according to a copy of the message seen by Bloomberg. A spokesperson for Amazon declined to comment. Amazon is not the only employer clamping down on remote workers. IBM says promotions will be harder to come by for those who aren't in the office. Zoom says employees who live near an office must be on site 2 days a week. And companies from Chipotle Mexican Grill to BlackRock and a parade of Wall Street companies have also increased the amount of time employees must come into work. Denise?
All right, thank you. And Bloomberg's Ann Cates reporting. And forget about Barbie Pink. Blood Red is the theme for Meg 2, The Trench. That's a movie about giant killer sharks. And it is beating out Barbie in China, dominating box office sales in the country. That's thanks to a helping hand from the Chinese government. And those are some of the company stories we're following this hour. I'm Denise Pellegrini, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Carol Masser here in the Bloomberg Interactive Brokers studio on this Friday after the closing bell a little under an hour ago. So checking out this post-market news with AMC obviously dropping about 30% after revising its stock conversion plan. But before we get into more news, let's get a check on the latest with world and national news with Nancy Lyons in Washington, D.C.
Thanks, Jess. FTX co-founder Sam Bankman-Fried has seen his bail revoked. The judge overseeing his case took the action after prosecutors accused Bankman-Fried of leaking documents in an effort to intimidate a key government witness. His attorneys argue that he was exercising his First Amendment rights. Bankman-Fried has been living at his parents' home since being arrested on fraud charges. The U.S. attorney who'd been investigating Hunter Biden will now serve as a special counsel in the case. That determination was made today by Attorney General Merrick Garland, who says David Weiss will now be able to work outside the normal chain of command.
The appointment of Mr. Weiss reinforces for the American people the department's commitment to both independence and accountability in particularly sensitive matters.
Former assistant prosecutor on Watergate, Nick Ackerman, spoke with Bloomberg Markets and says Merrick Garland wants to make sure there is no question about the justice system.
Look, the public has to be assured that everything is being done by the book, that everything that's out there is being investigated. And at the end of the day, I think this will give that assurance.
Nick Ackerman says this investigation is now 5 years old, so it's unclear what Weiss will now be investigating in the case. Donald Trump will need to limit his speech on his election case. The U.S. judge overseeing that one says today the former president has the right to free speech, but that the right is not absolute and must be weighed against protecting the integrity of the court process. And Judge Tanya Chutkan says the existence of a political campaign will have no bearing on her decisions. She also said while reviewing documents, Trump will not be able to have his phone or other electronics with him. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Jess and Carol.
All right, Nance, thank you so much. So appreciate it. Carol Masser along with Jess Metton, just in for Tim on this Friday. And the weekend show, you can catch that on Bloomberg Radio at 8 a.m. Wall Street time tomorrow. It's also on our podcast feed. And one of the stories that we get into, Jess, is Beyond Meat, which investors taking a big bite out of this past week, dropping another 17% for the week. And I meant to look at what Beyond is doing for the year, but I think it's down a bunch. No, it's actually up about 5.5%, but not a good week this week. The company reported earnings, cut its sales guidance, backed off its cash flow target. And Bloomberg News consumer reporter Dina Shanker writes about it in the issue of Bloomberg Business Week that is on newsstands and online right now and on the Bloomberg. And she talks about Beyond Meat's big strategy move into China, which turned out to be a lot tougher than the company thought. Here's a little tease.
After their IPO in 2019, which was just huge and everyone was really excited, Ethan Brown came in and did an editorial board. And when we asked him about China, he said they were going to be as aggressive as they could. And they were. They went in and they, like you said, they went into Starbucks, 3 menu items, 3,300 locations. They got on JD.com, all kinds of partnerships in China. But now going to find one is not so easy. And Starbucks doesn't have them online at the menus anymore. JD.com, they show up, but you can't order them. They're not